Welcome traders, I am Adam Harris, Chief Market Analyst, and thank you for joining me on this week's weekly analysis. This is obviously meant to be world-class, intended to be world-class technical analysis to give you a sense of what the coming week is going to be looking like. And this is for the week commencing Monday, the 9th of October, 2023. So we had a very interesting previous week. It was absolutely phenomenal, finishing off with non-farm payroll. And very interesting to see how the market reacted to that. So I'm going to take you through that because what happened is relatively common, and it is also very significant. And it's especially significant considering that last week I was talking to you about September and how September can be quite dire and what the potential is for October. And I'm going to wrap up with what it does now look like we are going to be seeing happening in October. So stick with me. Let's have a look at the economic calendar news for the coming week first, and then let's get onto the charts and I'll take you through this and also direct you to where I think some of the best trading opportunities are going to be this week. Okay, so now having a look at the economic calendar. So first of all, we don't really have much happening on Monday and Tuesday. The markets will still be moving anyway. The markets are not driven only by the news. They do move on their own. There are obviously specific purchases going through the markets, people placing orders, buying and selling anyway, regardless of the news. You and me, for example, we don't necessarily, I hope not, we don't buy and sell anything in these financial markets just based off of the news. That would be a terrible idea. Okay, so now, US dollar on Tuesday, there'll be some PPI data coming out. I think also the market is going to be focused on the FOMC meeting minutes, whether there is any intention or hinting at the dovish or hawkish sentiment, and also whether there are going to be any future rate hikes. So it's a personal comment of mine. I think that they'll possibly consider one more rate hike, but between you and me, I don't think they need to. I think they just need to take a breather, just let the market kind of find its place. Then if we have a look at sterling, I think on Thursday, I would expect the market to be eyeing out a GDP. From what I can tell, the UK's economy is doing relatively well. So my expectation is that maybe not necessarily beating the forecast, but certainly it should be positive. Then really there'll be a lot of volatility around Thursday's unemployment claims. I'll be watching that. CPI, of course, naturally, we'll see, but unemployment claims potentially. And that's really it for most of the week. So I would consider it a relatively light news week compared to last week. And really because I think for the most part, what happened there? There we go. And for the most part, I think that really the market is now looking to maybe just have a calm week for once. So let's see what the charts are telling us about that. Let's go ahead and have a look at the charts. Okay, so the first chart we're going to have a look at is the VIX. So just draw your attention over here, please, to the monthly on the bottom right-hand side. And all I want you to take away from this is, although we had a little bit of a boost during September, for October, for the time being, we are still staying in the very sort of low area. And also here you can see multiple rejections the last couple of weeks. What does it say? It really means that, again, the market is not on edge. It's not on edge. Everything seems fine. It is operating as normal. Okay, so we will see signs. If the market is starting to get stressed, we will see it here. We're not seeing it here now. All right, so let's move across and have a look at the US dollar index. Okay, so for the first time in several weeks, we finally have a bit of a rejection. It's actually our second rejection on the weekly here. You can see a bit of a failure the previous week. And this most recent week, we have a bit of a failure, but we also have, so it's not really strictly speaking a gravestone doji, but we have a little bit of a red body here. We can see it on the monthly as well. We've broken outside of this range, but we haven't quite succeeded in going anywhere just yet. So this is what I'm going to be looking for this week. This is not a super strong rejection candle. A better rejection candle would have had a fuller red body and would have closed lower. That would have been a better sign. However, what this is a sign of is now the market is, or at least the dollar is starting to become exhausted. All right, so the question really is, will this coming week see a very big correction or a minor correction and possibly another attempt to resume the trend? I think we're very much more likely to see at least an attempt at a bit of a correction down towards these previous highs over here. So I'll be looking for a break of the low here. Again, if we kind of have a look at it on the daily, we had reached a previous high here at 106.50. We then created a fresh high at 107 and came back down below that. So this week I want to see if we move back down towards these previous lows, possibly even back down towards these previous highs, or those previous lows would be fantastic. Only just because we really are overdue for a bit of a correction. It's not as strong of a rejection as I was expecting, but it is definitely a rejection. So there's no doubt that there is now some sign of depletion occurring in the market. If we compare this, if we go go across there and have a look at euro dollar, you can kind of see a little bit more of it over here. So for the sake of illustration, I'm going to map this out for you a little bit better. This is a very calm, steady trend. We broke to the low here down at 104.50, call it 105. Came back up, moved down, just broke below those previous lows, and now or have started to move up almost again, almost back up to these previous highs. So in actual fact, the market is already not really testing really much further lows or deeper lows, and now almost immediately coming back up to test these highs. So again, collectively, that behavior now says the euro dollar is definitely considering a change in trend in the near future. So the question then becomes, how would that look? How will we know which way it's happening? How will we know if it's happening this coming week or following the following week? So this is in an example of how I've mapped it out. One possible way in which it could unfold is if we encounter resistance at these previous highs this week, and by the end of the week we have continued down and created a fresh low. I believe at that time we will potentially produce a very nice solid bullish, either engulfing candle, so we could get a double bottom, or a potentially slightly lower, very strong bullish candle with some bullish divergence would be as close as you can get to a clear signal that the market is ready to reverse. So in this particular scenario, I'm talking about a situation in which the market does continue down, but by the end of the week has clearly encountered another rejection, which would make it the second or third rejection in 10 or 20 days. So in other words, in recent price action. And finishing with that, I think we would then see a big climb to the upside in a single move, which means if this happened by the end of next week, the following week, we would see a move all the way back up to 107 at a minimum, if not further. So that is definitely one way it could unfold. However, if the turnaround is going to happen this week, I would expect a potentially higher low. So in other words, the market would continue back up to these previous highs of 107 now, and then possibly produce a higher low before continuing higher. So that's one of the things that I'm looking at, and that would be a very clear signal. And where else would signs of that be? Very much so, that would be showing up in the commodities, it would be showing up in equities, which I'm going to talk about in a moment. It would be showing up in the metals, in crude oils, potentially also showing up in individual equities as well. Part of the demand for this stronger dollar has been driven by the shorter term bond yields, which is very attractive in terms of US dollars. Looking at it from a weekly perspective, you can see again, very similar to almost inversely correlated with that dollar index. We do have a bullish rejection candle. It's our second rejection candle off the same level, off a nice round number, and a little bit of a green body. Again, a fuller green body. If it had been twice or three times as big as that, would have been a much stronger signal. That's why I'm not convinced that we might get that reversal yet. We might get a move higher. It's absolutely possible. I think it's one of two scenarios. I do really think we're close to a turnaround. So we're either going to see another move down and another rejection, or we're going to start the rejection here. So it's either going to be this coming week or the week after where we're likely to see that. And looking at it from a monthly perspective, this could result in a very strong bullish candle. I'm very intrigued to see how that is going to happen. Very quickly, so I am now considering expanding my members section on my YouTube channel, and I have two surveys. I have two surveys in the community section. I would be very grateful if you would complete them to the best of your ability. They are limited in terms of what I can ask you, but here is really what my goal is. If I did create a members section with different tiers, I want to make sure that I'd be providing content that would positively influence and give you measurable improvements in your personal trading results. One of the greatest contributions I can do is to improve your technical analysis and to help keep it real. However, I would like to be able to do more than that, and I would really appreciate it if you could give me feedback by completing these two surveys in this section to really highlight for me where you feel you need the greatest improvements. That doesn't necessarily mean that there aren't areas where I spot where you need improvements that you're not aware of, but for now, certain areas where you feel you would really appreciate content that I could provide you that would make a difference. I would also obviously include in this, one of the things I'm thinking of doing is more live sessions where you can interact with me and we can talk about what's going on in the markets in real time, but also where there's stuff where I could produce content for you that is really going to make a difference for you. So please, if you can complete that for me, I would be very much grateful for you so that I can then plan it. And if there is a way in which I can offer a solution, I want to be able to make sure that it's exclusively available here in this membership section, which is where you get as much access to me as possible. And I really appreciate that. I will leave you with this. Let's carry on and let's have a look at the rest of the markets. So looking at sterling and speeding up this whole process a bit, because we're sort of 9-10 minutes in, I want to, don't want you to spend your whole life watching this stuff, is you can see a much better quality weekly candle here, a little bit more of a body. Again, it's important that we have both of these wicks. Both of them tells us this is the turning point, right? This is where we're looking to see it happen. A third one would be the more wicks we get, the more likely it is to ultimately reverse. We could still get another one. We could come down and tap 1.2 and then have a strong rejection. So that's really what I'm going to be focusing on this week. But I wanted you to see that. Aussie dollar as well, you can see is trying to stay above this level, this 0.64 level, trying to stay above that. You can also see the wicks come in on the monthly. What's interesting now is that although the Aussie dollar and potentially Kiwi dollars had been weaker in the last few months, they've done their run now. They're actually looking a lot stronger than sterling, for example. So Kiwi dollar as well, you can see it's actually stuck within this range and is still pushing up. Okay, it's still looking good. So I think we're now looking at a very feasible area, at least where, at the very least, we will get a weekly retracement on the US dollar. But it's quite nice to see that. Okay, dollar yen. So dollar yen is running out of steam in its own little way. 105, or that, sorry, I beg your pardon. Well, that 150 area, that 150 level, this one over here is certainly for the Bank of Japan. I would consider that a significant level that they definitely are watching and monitoring in terms of what the market might do at that point. So something that I would be keeping an eye on. I would see if we would battle in this area. So if that does happen, if we find that that dollar ultimately starts to weaken, this is the area where it's going to happen. So amongst the other things we would see here potentially is a bit of a change. There's a lot of little reasons why the dollar should take a bit of a breather. Okay, dollar Swissy as well. That's a nice little double wick rejection there off that 50-period moving average. Again, we've broken the lows here. We've got a slightly higher high. We've got bearish divergence. Signs here that this week is going to be a little bit choppier where we could get that reversal. Okay, dollar CAD. All right, dollar CAD has got clear bearish divergence here with a higher high. There's a downward sloping trend line where it looks like it might be failing a little bit. Overall, this is still stronger than you might think. We've actually got it kind of largely going, it's got a little bit of a downward slope. We have started to attempt to breach that downward sloping trend line. So I do think we're going to see at some point in the future, dollar CAD is wanting to head to the upside, but it's not a very strong trend at this time. It's more sideways. So not too worried about that just yet. All right, let's have a look at any currency pairs of interest. Okay, so having a quick look here, Pound Aussie, I do quite like the fact that we've come back to test resistance and find support here. We've got a bit of a swing low happening there. That monthly is also looking nice and bullish. So a break above these highs should see a continuation to the upside. Looks pretty good there. If I have a look at, say, Aussie Kiwi, it's got a very nice, it's not a very clear trend, but it is looking heavily bearish. We can see when we look at the majors, we can see that the Aussie dollar is stronger than sterling and stronger than the euro because it's not dropping down as much, and Kiwi compared to the two is also very bullish. So it seems to me we're going to see some moves on Kiwi pairs, anything crossing with that. Aussie CAD. Okay, Aussie CAD has attempted to turn around though, not very attractive, nothing really there. Aussie Swissy I do find interesting. Very nice organic smooth trend on the weekly. We've got a bearish candle here, break of the low that could see it continue to head down. So a little bit cautious on that because we also have the potential here for an uptrend to the upside. It's one of those which way is it going to go, and it's going to focus on a breakout of this range. So let's just mark the range. If it breaks below that, I think we're likely to see the trend continue down on the weekly, and if it breaks to the upside, I think we're going to see that daily trend continue to the upside. Yen pairs, not super attractive at the moment. They're continuing to push higher, no matter how much they keep dropping. We could see a little bit of BOJ, Bank of Japan intervention. We could see the bit of spikes, a little bit more volatility. I am very cautious with the yen pairs now. I can see there's still that general push to the upside, but it's not the same as it was 6 months ago or even last year. Now look at the Kiwi pairs. So Kiwi CAD is in a very nice strong uptrend. Very nice breakthrough, pullback, retest, nice bullish candle. The moving averages in a bullish formation, 50, 20, and 10, and a good continuation. So I think some really good opportunities here. We've got a higher low on the monthly. We're starting to turn around. So I think Kiwi CAD, top of the list for trading opportunities. Also Kiwi Swissy. So although this trend is down, right now this is looking way more bullish than bearish. I think Kiwi Swissy's got some potential. Kiwi Yen. Okay, again, it's a yen pair, so I'm super cautious, and you can see that level of resistance there. But it is looking good for continuation. So Kiwi CAD, very attractive to me at this time. Let's have a quick look at CAD Swissy, see if there's anything else in place. No. So the only stuff that I really like, let's have a look at Euro Kiwi as well, see how that's looking. Euro Kiwi I think is a good chance of potentially hitting lower. Pound Kiwi potentially trending lower. We'll see how that goes. Kiwi dollar has got a good chance of pushing higher this week. Okay, so Kiwi CAD, for me, I expect this to push higher. So for me, I'll be focusing predominantly. There's not a lot that really jumps out. Kiwi CAD for me is a no-brainer, but the rest of the CAD pairs are looking very interesting. So now we are back onto gold. Very overextended, very nice bullish engulfing candle. At a minimum, my expectation is to see this attempt come up to 1850, 1875, possibly 1900. The only thing I really would have liked is for it to tap 1800. So we'll see. If we do get a bearish setup in this area at 1850, it could be a continuation down to 1800 and a bit of a reversal. But otherwise, I'm expecting, at least for day traders, there should be some good opportunities to the upside. Let's compare this with silver. So silver, even stronger, not an engulfing candle, but a very, very strong bullish candle here. So this has got, I think, 22, potentially 2250 in its sights for this week. Let's have a quick look at crude oils. So crude oils, right? This is where it's interesting to me. We're coming back to a level of support here at 81.20 on the weekly. So this is a great place for it to produce a bullish candle. Now it's a very strong bearish candle, and actually when you look at it from a monthly, it's a strong rejection, but we've just shifted into a bullish formation. So this is where I'm a little bit cautious, because this is a great place for it to produce that bullish candle. So possibly a bit of a stronger dollar if we do get that at some point in the week, and finishing up with a bit of a rejection, as I've mentioned in the first part of this video. We could see that. Then we could see a continuation to the upside. But in this case, I'm going to be extremely cautious. If we see a continuation or in any way a weekly candle that closes near the lows, I think we're going to see oil actually continue to head lower. So I kind of put all these fib levels here to highlight that there was a 382 and a 618 on the weekly overlapping with each other, but price actually continued to push both below both of those. So let me just delete that, and actually closed a little bit further. Should have encountered it. This is really the last place for it to turn around. It should turn around this area from the start of this week. I would expect it to continue up, and if it doesn't, if it just keeps going down, then I think it implies the medium term is going to see crude oil continue to weaken. There's a lot going on in the world geopolitically speaking, and although we have recently gone back into an uptrend, this was a really strong reaction. I really would have expected it to have closed higher or potentially only have gone as low as $86. It's gone a little bit lower, so it's not necessarily as strong. How it starts this week is very important. It should actually start to recover and climb for most of the week, and if it doesn't, then there's something bigger at play. We're going to see crude oil potentially go into a bit of a range, or possibly continue down, close down a little bit lower. All right, so looking at the Dow, moving on to my favorites, always to have a look at this. So one of the things I spoke about last week was we were coming to the tail end of September. How is October going to be any different? Now, we do have a wick produced on the weekly here, so that's a good start. Again, we need to see a break of the high before we see a break of the low, so we need to break the high of this weekly candle, which will be 33,939, effectively 34. I need to see it push up a little bit from that, but it would still be testing support. That's a very nice bullish candle. Again, what would have made it just that little bit more confident about which way it's going to go would have been a higher close. So in other words, the smaller the wick on top, the more confidence the close to the upside. Okay, in other words, the less give in the last bit of that session. Let's look at the S&P as well. S&P producing a bullish engulfing candle. Very nice off as well, by the way, this upward sloping trend line. Also off a level of resistance, which is potentially support, and a previous wick on, or at least a wick on the previous candle. And you can see it's coming back up to these highs. So there's a lot happening here where the market is signaling it really wants to go back up. Now, it's not weak. If it had closed near the lows, we would have definitely had a weak finish. We don't. We can now see signs that buyers are stepping back in. Whether they will succeed in changing the tide, that it's too soon to tell. But I think this week we're going to see more of an effort to push higher. NASDAQ. So look at this, very nice bullish engulfing candle on the weekly, and a very nice bullish engulfing candle on the daily, and the monthly producing a bullish, really nice. Obviously it's very early, we're in the first quarter, the first third of the month. We're seeing a very nice bullish candle here as well. So bullish signs off support. A lot of this means, let's see how this coming week goes. The buyers are back on the field, so to speak. The question is, can they win the next round? The Russell. Okay, so Russell produced the bullish engulfing candle as well. Again, I would have loved a close higher towards the top of less wick and closing up towards the high of that. We didn't get that. However, the weekly, this is not a strong close. In fact, if anything, this implies a continuation to the downside here. But it is also at the bottom of the range. So there are plenty here where we've closed in a similar fashion and the next candle's continued up. So the game is not over, and it is a monthly. We could close as a bullish candle by the end of the month. So not enough to tell there. The FTSE, all right, nice little bit of a, again, not strong enough. This is potentially a continuation candle to the downside, and we've broken below this level of resistance or support. We're coming up to test it. So this could turn out to be a head and shoulders pattern. I'm aware of that, but it's also stuck within a range. Okay, it's definitely within a range. So the thing about ranges is nobody's really in control. Buyers can push up, sellers can push down. I wouldn't invest too much emotionally into what is happening here because it's swinging wildly. Then we have a look at the DAX. So the DAX has produced multiple wicks, 2 weeks in a row, close off that 50-period moving average in this, the 10 and 20 moving averages here. Nice, strong. That's a really great close. That's what I'm looking for. Close near the highs. That's the kind of thing I want to see on the weekly candle or potentially on the daily candles as well. So this has got some potential to push up and see if we can get back up to 15.5 this coming week. The ASX out of Australia trying not to break and close outside the bottom of that range. Not a strong one, very much so not a strong recovery, but a push back into the range. And so again, I want to see if we break the high of this weekly candle, that's a phenomenally positive sign, I think, especially when we see those in other areas. And then if we have a look at the Nikkei, and actually in its way, this is strange. Although we did close lower and we closed below the lows, I have marked it in this green box as a really good area for this to ultimately turn around in. And let me highlight what is a good thing here is if I just draw a little bit of a line over here with these, just put a line in there off those highs. You can see price has touched that off the 10-period moving average as well. You've got the 50, the 20, and the 10. The good news here is that price has connected with the previous highs and has now connected with the moving averages, which means, to my mind, it has completed. It had a really good breakout. It has now completed a healthy retracement and has reached the point where it can now turn around and resume the uptrend. So for me, I find that a particularly good sign. Even though it has closed lower for the week, it's now in a location where sometimes you'll hear me say that. You'll hear me say, well, I feel like NVIDIA still has to correct a lot further. It still has to come down. It can't turn from where it is. It's not enough of a correction. I have been saying that about the Nikkei for a while. Now it's not a problem anymore. It's now in the sweet spot. Nikkei, this is what I want you to do. I want you to find the strength, pick yourself back up, and resume the uptrend. Okay, let's have a look at equities. Very nice. Look at this daily. Believe it or not, that's a mess, but it's actually a higher low. It's a very nice, strong, bullish candle closing up above these previous highs over there. It's a very nice swing low. Ladies and gentlemen, this very solid bullish weekly candle has closed above the previous candle's high, thereby introducing a swing low. So I'll tell you what you want to do. You want to mark this high over here. You want to mark that over there. And you want to keep that as your downward sloping trend line so that when we start to breach that, you know that it is definitely becoming more and more bullish and is likely to resume. And that makes it a bit of a bull flag. There we go. A little bit of something for everyone, different types of traders here. Also, we have retraced back into these highs and are currently producing a bullish candle, which to me, as bull adding to the portfolio, would represent a buy opportunity or something to add to the portfolio. Okay, so that's what I'm looking for. That is a good sign. All right, happiness. Right, let's look at Amazon. So Amazon, small doji, spinning top, inside spinning top, also great, love it. Off a level of support, a monthly level of support. Off the moving averages. We're not above the 50-period moving average. We really have to get back up above that on the monthly. That would be great. Very nice bullish engulfing candle here. These are bullish signals. All right, there's definitely a level we are battling with here at 140, so I'm going to chuck that in. So no doubt we need to keep an eye on that level. But it is there, and I think we might be able to get through it. So far, I'm relatively happy with that. It was this bearish divergence, a slightly higher high in that bearish divergence. So I was expecting a deeper correction down towards 140, down towards here. But these are good signs. We can turn back from here. That would be great. We would basically effectively be range bound here and working our way back up. So let's see how that plays out. AT&T, not telling me a lot here actually. All right, we've gapped down and then closed up a little. It's not a lot, not super strong. Not really revealing much here. It's not super strong. We got wicks below that, so it is trying to turn around. just not offering any real solid signals compared to the others. Okay, so I mentioned this was last week, mentioned that little bullish candle. All I can add to that is we have another wick here. So it's a red body, sure, but it's another wick. Okay, so buyers are desperately trying to turn this around. Look at the wick, and the lows of the wicks are all staying in this area. It's trying to stay above that, and not a bullish engulfing candle, but a strong bullish close. So buyers not obviously jumping back in, but potentially. In other words, if we turn around from here, it will look a little bit like a swing low in at some point when we look back retroactively. Okay, we're still within the range of Glencore. So what I'm going to do, just grab this and just expand it, because when we break out the top, we're going to move. Doesn't really tell you much there. All I can say is we've broken above, come back to test this level and produced a bullish swing low here. That's all. Tesco. Bullish. Well, that looks good. Tesco's doing fine. Look at that monthly continuation, taken off from the moving averages, closing so far, or at least above the highs of those. That weekly candle having closed just about. What was the close of this one? 278.4, and the high of this is 277. So it's already closed above these previous highs here. Also, not a bearish signal, is it? But let's find out. So then we've got Amex trying to produce off this little level here, trying to produce a level of support with a bit of a bullish candle and a monthly bullish candle. Okay, solid downtrend here. We need to see this move up higher this week. We've got Berkshire Hathaway. Oh, Berkshire Hathaway, I had mapped out a potential play for it. Again, Berkshire Hathaway could on the monthly come back down, but in the past, it can sort of come very close to the moving averages and take off. We could see if that's going to be the case. So I'm going to wait and see on this one. If it did continue down a little bit further, I would be okay with that. But it is also in a really good place here, potentially on that weekly where it can turn on. And it's not as strong. This is not a strong rejection candle. So room for this to still continue down. I don't think there's a strong, this is a signal that it's going to turn around here. Okay, so we've got Coca-Cola. And again, that's possibly what's pulling Berkshire Hathaway down is that. But look at the Coca-Cola overextended and a strong bullish candle here. If nothing else, this is a good indication it can retrace within this downtrend here, possibly maintain that hold above. If we go and just put it over there, hold above that level of support. We will see if that's going to be the case. And if we just move that there, this ultimately becomes support. We'll see. It's on the 50-period moving average. It's a good place for it to find support. Let's see, but not again. Other than a signal for potential retracement, it's not looking like a turnaround. Okay, BP. Looking fine. I've highlighted this area here just because that's where it's stuck within that range. Overall, still in that area, still climbing for the most part. In this area, we know that's the danger zone. It's not going to be able to get through that. Not a lot else happening here. Just we'll see if it's going to push higher. ExxonMobil. For that period, also got a level it's going to have to battle with, and it's had not a great week, but again, tied to crude oils. Remember, we saw that very slow, very solid red close on crude oils. We'll see what happens with those. We're gonna have to see. I'm not convinced yet that they're going to have a very strong recovery off that. GM, the only thing I want to mention off this is that we were stuck within that range and we've closed a lot lower. So this is not really doing very well, but this is a level of support we've had in the past. And if you wanted to include it within the overall range in this area, it would still qualify, especially if we've got a bullish candle from this point onwards. No, so let me just kind of do a very sort of midway through the equities. Let me talk about it and say, so far, I'm seeing a mixed bag. I'm seeing a few that are showing some good bullish signs. I'm seeing a few that are not, and a few that are neutral. So there we go. Okay, JP Morgan is trying to stay above this level. It's a bit of a doji there, but not bad. A little bit of a green body in that area. We'll see how that plays out. And if it could continue up from here, loving the wick overall. It's relatively clean price action, so we'll see if it could do it from here, but not a strong close. All right. There are plenty of turning points in the markets that don't appear strong, even in hindsight. They were indecision sections, and then the market wins. So, whereas, this is interesting to me. For example, here we've got a test of a level, another test of a level, another test of a level, inside bullish candle off that level, and a little bit of bullish divergence, which implies that this is trying to turn around here to push up. Okay, not a strong weekly candle at all, but it is trying to turn around here. We'll see if it succeeds this coming week. Meta. Okay, there we go. Meta now pushing, closing above these previous highs. That weekly looks really good. Okay, it's in the moving averages. So from a weekly perspective, Meta's going to take off now. It's going to try and take off from here. From a monthly perspective, it has not had enough of a correction. So one way in which this could play out is that it goes sideways for a long period. So in other words, this area over here becomes a problem for Meta to get past, and it goes sideways until the moving averages catch up with it, which takes 2 or 3 months, and then January it takes off. So we get October, November, December, the moving averages connect with it, and then it takes off. That's one way in which it could play out. Morgan Stanley, fell outside of the bottom of this range and then closed back up. So again, it's another one that has dropped a little bit outside the range, and we'll see if it's now outside the range, if it's done. But it's not what I would call a really solid breakout. A breakout should be a solid candle closing near the lows. That would be, this thing has burst out of the range and wants to escape. This one is almost like, whoops, I fell, slipped, but I'm back on, that kind of thin line. Nvidia, look at this, also already trying to find a bit of support in this area. Okay, so let's just copy that and put it in this area, trying to find some support in this area, but a potential for a double bottom and then a move high. Again, similar to Meta, I would prefer for that monthly to have connected with the moving averages. It's a much healthier, much more healthy retracement. We haven't had a proper correction here, which tells me that if we haven't had that, there's a fair chance that price will not be able to go beyond this area until we connect to those moving averages. In my experience, that's often what happens. If it doesn't want to retrace, it still can't continue because there's not enough buyers above the level, but there's plenty of buyers to prop it up from underneath, just not enough to keep it going. And often what happens is it ends up treading water or going sideways until the moving averages connect, and then it takes off. And that's something that happens when I see this kind of scenario. It happens more often than not. In other words, it's a 60+ % chance of happening in the situation. So if it does end up happening, we don't have to be surprised. If we keep going, then the market in theory is really bullish. Netflix retraced back into these old highs, producing a little bit of a beautiful little bullish spinning top. Very nice bullish engulfing spinning top over here on the weekly. It's in the buy zone, meaning the little green box I put in for it. That's a good place for it to turn around and start working its way back up. So that's a good sign. PayPal. Again, I've always put this question mark here because PayPal is just struggling, man. And I don't have any solutions. That's not really kind of my area of specialty. But notice the wicks and wicks and wicks is trying to turn around here. And we've got a little bit of sort of bullish divergence. So PayPal is really trying to turn around there. Spotify, very good. That's a very nice bullish continuation signal. So Spotify's got a little bit of a level of resistance here, but that looks like that's going to be able to push up. It should be able to get past these rejections this time around. Looks good. Definitely does not look terrible. Spider, also a little bit, whoops, I slipped, I dropped below that, but I managed to close back up above the line. And so we'll see, it's a slippery surface. We'll see FedEx battling with this area, but not dropping heavily, just actually overall it's kind of like a climbing angle, and so therefore I think it's fair to say I'm just going to do this. I'm not going to look behind here, I'm not going to look further back. I'm just going to mark this here so we get at least that bit of a sense, and let's see if it could stay, and if it stays, goes within that. But not looking terrible. Let's have a look at Tesla. Tesla's still stuck within the sort of triangular breakout area, and it's produced a swing low. It's got a bit of a bullish candle forming here, looks bullish over there. So Tesla so far safe at this time. Vanguard producing a bullish weekly candle there within a downtrend, so that could be that swing low on the bottom. Very strong bullish engulfing candle. That's what I really want to see in closing near the highs. I want to see more of that. Bit of a bullish candle forming here off the moving averages. So again, lots of bullish signals here. Walt Disney producing. Now this is interesting. So let's talk about Disney. I have commented on Disney. It's been introduced to the list because it's back to 2013, 2014 prices. It's given back 50% of its value. So all of those things are not really positive things in my mind. And this was kind of that cliff edge. This is really that point. If you go below this, then I think Disney's future starts to look dire. And that's why I mentioned it. However, when I look at it here, we've got a bullish engulfing weekly candle off a level of support. I'm 100% going to mark this because this level is then obviously quite significant, and we could see this. Starting to potentially hold, and it looks pretty good. So I'm going to mark that, and I think we're likely to see it. This is a bullish engulfing candle here. This is a lot of signs here that Disney is finding a floor and could potentially work its way up from here. And I'm surprised because I actually thought this is it, Disney's done. But it could very well be that because of that, it has become very attractive for people, that this is about as low as it can go. And if it doesn't turn around here, if it does turn around here, this is the best discount you're going to get on Disney for the next, whatever, 10 years or more. And whereas at the same time, if it does drop below this, you can exit and not lose very much. So that's possibly why it's attracting people to get into it. Okay, very quickly, let's run through the 10-year T-notes. Still not getting much love over here. Still continuing to drop down. I don't expect much from these. Okay, Euro as well, putting the brakes on in this area, quite near these lows over here. And you can see overall, it doesn't really want to go much lower. There's a difference. At least the Eurobond doesn't want to go much lower. And finally, let's have a look at crypto. So cryptos have actually continued to hold up well. 28,000 is resistance for Bitcoin. But I think we've got some room for it to continue to push up, okay, to push back up into that area. Ethereum battling with resistance right now, but I think these levels will potentially hold. Okay, so it's just very choppy. Let's have a look at Solana. Solana pulling back, potential bullish candle here. So it's largely sideways behavior, but it's not weakness. There's no real weakness at this time. Even Cardano, which is holding, I'm going to mark this level over here because it's holding with that. As long as it stays above this level, I think there's a good chance it's going to recover, but it's not looking as healthy as the rest of them, and Binance as well. I'm just going to move this down to incorporate that. It's just trying to stay above that level. Actually, the thing is that both Cardano and Binance look like they're potentially looking for a squeeze, and they're going to burst to the downside. That is interesting to me. They need to break soon, need to break to the upside here to do that. We've seen Bitcoin actually do relatively well, and Ethereum not far behind. And the other three I just put in 5, so you've got a bit of a bouquet, so to speak, to get a bit of a sense of what they overall are doing. But Cardano and Binance look weak in comparison to the others. So really need to see these break these levels here and break and close above that. For me to retain any confidence with those. They're looking as though they are getting squeezed. The question is, are they going to burst to the downside or to the upside? There we go. So ladies and gents, I'm going to leave you with that. It's been a long one. I apologize. But I look forward to seeing you in the next week. And look, we could see some really good stuff. Possibly, as I said, just to recap, we could see this week that dollar takes one last push. We see euro and gold and a few others get pushed down, maybe creates a few fresh lows or double bottoms. And then hopefully by the end of the coming week, we see a rejection, meaning that the big move up, the weaker dollar is going to take place in the following week, which is 10 days from now. Or if we're actually lucky, we get it this week. Okay, and so October starts to look more and more positive and finishes on a strong note. Let's see how it goes. Trade, keep that in mind, trade cautiously, stick to your plan. All right.